Hello and welcome to the weekly roundup for the weekend in Friday, the 9th of July. Hope that you continue to enjoy the weekly reports. Again, subscribe to receive regular stock market content in the box below. Also, any questions, pop them in the comments box below. Love to hear from you. And also head over to the website and feel free to subscribe to the Research Centre for all the latest reports. Well, what's been happening this week in the markets? To be quite frank, before we get into the markets, let's take a moment just to mention and appreciate the fantastic performance of England at the Euros. Great team, outstanding leader. And if you're like me and have been an England fan and you're over 40, then you'll know this run is long overdue. So well done, Gareth. Well done, the boys. Best of luck for Sunday. You've got this. The whole Atlantic team is behind you. It's been said a lot over the last 25 years, but you know what? This time it really could be coming home. So yeah, let's have it, lads. Right, back to the markets. Stock indices in both Europe and the US are set to end the week in the red. Concerns over slowing global growth, Delta variant flare-ups, and a Federal Reserve which is moving towards tightening monetary policy sent the stock market sharply lower on Thursday, wiping 8 gains from the week and even beyond. Parts of Asia are in lockdown again as COVID cases ramp up, and economic data, particularly from the US, has been on the softer side, prompting speculation that peak growth has passed. Traders are less concerned about the elevated inflation and rising interest rates, and the Treasury yields we have seen slump to a 4-month low this week, even as the minutes from the latest Fed meeting showed that they're still moving towards tightening policy. Economic data in Europe's been relatively sparse. UK GDP disappointed, showing that the UK economy grew 0.8% on a month-on-month basis in May, which is just down from that 2% growth in April. So both the FTSE and the DAX are set for mild losses of 0.5% this week. Doesn't feel so mild when it was all served up in one day on Thursday. But we've also got the US tech-heavy NASDAQ looking at posting a 0.5% decline, S&P down 0.7% over the week, and Dow Jones a 1% decline. Cyclicals really did come under the most pressure in those areas. In the FX markets, the US dollar is set for a mild weekly gain of 0.1%. The bulls and the bears are really battling it out there over the hawkish minutes from the Fed and the failing Treasury yields. Euro against the dollar, it's looking to end the week flat, showing resilience even though the ECB adjusted its inflationary targets slightly higher to 2%. That was a very dovish move. And the pound against the dollar, well, pound is set to lose 0.15% across the week. Trade sub 1.38 as COVID concerns and weaker GDP data weighed on demand. Over in the commodities markets, we've seen oil after 6 straight weeks of gains. Oil is set to end this week around 2.5% lower. The sell-off in oil came after the OPEC Plus group failed to agree on raising output across the second half of this year. OPEC Plus talks were abandoned, prompting fears that producers would ditch the current production curbs and kick off a price war for market share. Larger than forecast draws on inventories have helped the price pick up off weekly lows, but still overall a tough week for the oil. Gold has had another strong week, running around 0.9%, marking its 3rd week of gains. Precious metal has reached a 3-week high of 1818, benefiting from US Treasury yields tumbling across the week and the rising nerves over surging Delta cases. But it's failed to hold on to these gains, so again it's retreated back to the familiar level of 1800. Notable stock movements. Wow, supermarkets actually. Very boring and steady safe sector turned into a very lively one. Morrison's accepted an offer from the US equity firm Fortress, which sent the share price surging. And the move has opened the possibility of a bidding war as 2 other interested parties are also circling Morrison's. Meanwhile, Sainsbury's reported upbeat numbers, lifting their full-year forecasts after a boom in clothes and online grocery sales. So their share price is up over 4% higher this week. Entain rallied across the week. They own Ladbrokes Coral after upgrading full-year profit forecast and revealing an 11% rise in revenue in the first half of the year. Online betting more than made up for the closure of the betting shops across the pandemic. The stock is likely to remain in focus ahead of the Sunday football as well. And indeed features in our app as a very bullish uptrend, one you should certainly be following. Over in the US, Didi Global, ADR, the Chinese ride-hailing giant Didi Global slumped 27% this week after their IPO on the 1st of July. The steep sell-off comes after Chinese authorities told online stores to pull the app amid concerns over how customer data was being used. So Chinese tech stocks listed in the US, such as Tencent and Alibaba, are also experiencing heavy losses this week as well. Over in the UK, big IPO or DPO with the Wise coming straight to market yesterday. Fantastic performance from them so far, and what we here feel is going to be a big player in the UK markets moving forward. So that's it for this week. Thank you very much for watching. Please remember to subscribe. I hope you'll all be watching the match on Sunday. Whether you're into football or not, let's get behind the boys, get behind our country, and make it happen. Take care. Goodbye.